started out as a small D2C company that wanted to change the way Indians buy mattresses. Now, a decade later, it is a 1,200 crore rupee plus business that is preparing to enter the public markets, which is a very different arena with much higher expectations. At the center of that shift is this place here in Hosur in Tamil Nadu, where this factory behind me didn't just build the brand, it now has to prove that Wakefit can operate at the scale and efficiency and discipline that public investors will expect of it. But is the company ready to make that leap? We're going to go inside to find out. This factory, you can see how Wakefit has built its business around vertical integration, which means cutting, assembly, finishing, all of it under one roof. And this is the model that gives the company more control over cost and quality, especially as it looks to scale offline. Now, the real test is going to be whether this model can deliver Wakefit the kind of scale and margins that public markets will come to expect. Chaitanya, thank you very much for inviting us to your factory here and for speaking to us today. It's now been a decade since you started out to now, looking to enter the public markets. Just to begin with, for our viewers, as you reflect back on these 10 years, what are some of the 2 to 3 sort of turning points, inflection points that stand out for you that have shaped the way the company has grown?
I think when Ankit and I started about 10 years ago, we were both failed entrepreneurs. So every learning that has happened has been by following customers and what they wanted.
Yeah.
So if you really ask me about 2 or 3 inflection points, the first is we pioneered the 100-day trial policy for our mattresses so that customers could take it, try it in the privacy of their home, decide whether they like it or not.
Yeah.
The second big thing was to look at a true omnichannel experience.
Yeah.
So we were a purely online company, which was available on marketplaces and our D2C website. But about 3 years ago, we ventured offline in company-owned, company-operated stores. That really gave a great experience to consumers. And our philosophy of educating them before they buy was a very big thing to be done offline. So these two were something that's very important for us.
A bit more about the IPO before we move on. Both you and Ankit are also selling shareholders in the OFS. You're offloading about 12.8 million shares together. What kind of message is that going to send to investors? What would you want to tell them about how invested you are in the growth story?
I think more than the specifics of that, what is more important is that post the listing, we both still own a significant amount of company. I think it's closer to 35% if my memory is right. So we are here for the long haul. We have built it for the last 10-11 years. My third venture, Ankit's second venture. For us, Wakefit has been our life's work till now. It's a very small portion given that it is a liquidity event after so long, but we want to continue doing this for a while.
So it is just that, it is just a liquidity event. There's no other message, so to speak.
Because when you have 35-40% still left, you still maintain creative control, financial control, skin in the game. So we are here for building this.
Okay, let's also talk about the proceeds, because a large portion is going towards 1, your offline expansion, and 2, your marketing expenses. I mean, rather than say, looking to build your digital channels or invest into the factories. So, what is the sort of thinking there? What are you trying to achieve?
Every company goes through its phases of different investments in different parts of its life cycle. So we have the Greenfield project that you see here. It's one of the largest furniture factories in India. So during that period, a lot of the company's investments went there. Today, as it is scaling up, we need to invest in marketing. But as a company, we've always invested very frugally. In the last few years, marketing has been between 8 and 12% of the overall revenue. So we've been very frugal, make sure that the company customer acquisition cost is low, repeat is very high. And so we've never been a company that's reliant on marketing for survival. It's necessary, you do it. So even that, if you look at the amount that we have put in the IPO proceeds, it still amounts to the same 8 to 10% kind of a range. It is very, very sustainable as a company.
So, how do you project payback from the kind of investments you're making? Your losses have widened this year from the previous year to about 35 crores. What would you guide investors? I mean, while your losses have come down over the years, how soon before Wakefit is a fully profitable company?
So out of the 9 odd years that when we filed the DRHP, about 7 of them were profitable,
Yeah.
EBITDA and PAT positive.
Yeah.
The 2 years that we did go into losses was because of the huge investments we made
Yeah.
into the greenfield project. That was never existing in India itself by any
Yeah.
company.
Yeah.
So today we've reduced that completely, and you will see that even in the coming years we will continue to focus on structural efficiency, ensuring that we are very, very frugal. So you'll see us even when the full year financials come out,
Yeah.
you will see that things are continue to improve.
Okay, let's talk about your omni-channel strategy, because you're spending a lot of energy into going offline as well. You have about 130 odd stores already. What is the plan over the next 3 years? What is an ideal mix for the company post IPO?
The plan is to continue to open stores,
Okay.
but it is always going to be calibrated. We don't take a store opening target,
Okay.
because that is the wrong incentive to give to the retail team. You will, in your hurry, you will choose the wrong micro markets, you will choose the wrong building because you are trying to achieve a target. So what we want to do is open a steady 3 to 5 stores every month.
Okay.
Make sure that they pay off very well. The payback period is very low, and you choose the right place, right building.
Yeah.
So that is the target. So it's not to open a X number of stores. In terms of the mix, we are not going to be measuring ourselves on that. We are going to be measuring ourselves on the own channel revenues.
Okay.
Because own channel would mean our D2C website and our stores put together.
Yeah.
Because consumers research anywhere, browse anywhere, purchase anywhere.
Yeah.
So we cannot just say that I will not be present here or I will drive transactions to a particular channel.
Yeah.
But what we do measure is as an integrated number of
Yeah.
store plus D2C website, that should be large.
Yeah.
As of the DRHP time, that number was 55%.
Yeah.
Which means where our reliance on marketplaces is less.
Yeah.
Post that, if you look at the full year financials, that's gotten better. I'll be able to talk about the specifics once the RHP is filed.
Of course.
But that's improved even further.
But how long does it take typically, and now that you're talking about opening these jumbo stores, to break even per store? How does the unit economics also work?
The payback period is, I will be able to say that the payback period is about less than a year.
Okay.
For the individual stores, but the jumbo stores are large format stores that are very prevalent in our industry of furniture.
Yeah.
But it is something that we are trying out now, because we believe that's a great way to demonstrate that Wakefit is a design destination.
Okay.
With a complete home product. If you have the 4 walls, you should be able to get everything from Wakefit. That's Ankit and my plan and dream.
Well, we're here in Hosur. It's one of your largest facilities. You have 5 at the moment. Any plans to, open more facilities? Are you target expansion with this fresh money that you'll get from the IPO?
Expansion has to be based on what capacity we need.
Yeah.
So it's not a pet project to build factories. So today what we have is really good for the next 2.5 to 3 years.
Yeah.
So as we come to that inflection point, we will think of the next either greenfield or brownfield project, depending on which area of the country we want to invest in.
Okay, what about the revenue mix as per products? For instance, you started out with mattresses, that is now more than 60% of your revenues. Then there's home furnishing and there's furniture. How will this mix evolve? I mean, what do you think are the fastest engines of growth for the company in the future?
Mattress has been our mainstay.
Yeah.
Like you rightly said, it's about 60%,
Yeah.
but it's still growing in double digits.
Yeah.
But furniture, given the small base effect, is growing way faster than mattress.
Okay.
So mattress continues to be a strong pillar, and it's a great way to acquire customers.
Yeah.
Where they've had the first experience of Wakefit, trust it, have a really, really good thing to share with their family, friends, and they become advocates. And then furniture comes into their life.
Okay.
That's the plan. And so we don't foresee this to be one or the other. The flywheel is running because customers come back for more products. So that's why all of them will grow, but furniture is definitely growing way faster, given that it's a smaller base.
But could you give us a sense of what the mix would look like, say, 5 years down the line? Would
5
mattress still be 60%? Home furnishing is, I think, 11%.
You're right. Mattress today is about 60%. Maybe 5 years. 5 years is too far out.
Yeah.
3 years out, we think mattresses would drop down to about 55%.
And finally, Chaitanya, if I were to ask you, in the last 10 years, you've gone from 0 to more than 1,200 crores of revenues. Will the coming decade be much better, much faster growth for the company?
I wouldn't be able to comment on how the coming decade is going to be, but I think as a company, we are structurally poised with the right infrastructure, right founding blocks, right building blocks, to be able to take advantage of what is coming in India, which is aspirational consumers, middle class having more disposable income, wanting to decorate their homes as a matter of self-expression. So those things, whenever that comes up, we are in the right place. So we hope to take advantage of that. But hoping for the best.
Wakefit has grown on the back of strong manufacturing control and fast execution. But markets demand more than momentum. They demand predictability, profitability, and results. And life as a listed company is going to test whether Wakefit can deliver that quarter after quarter. With camera person Manjunath in Hosur, this is Ritu Singh.